the stock market morning prep video for Thursday, September 11th. We did get some green across the board. Dow Jones up 54, Nasdaq up 34.24, S&P up 7 and a quarter, and the Russell up $6.49. That was before we had a little bit of a sell-off at the opening. Sold off till about around 11:30, and then the markets reversed. And like I mentioned in yesterday's video, be very, very careful looking to get short here at the moment. We are at lofty levels. Yes, we are extended, but what's happening while we are in a sideways consolidation for the last 10 trading days, the markets have unwound their overbought readings in our oscillators. So that tells me there's starting to get some building up some pressure. And when we have a little bit of a volatility at these areas, to me it looks like the markets and indices are ready to vacate the area. Now, up or down, we don't know yet. We have to let price tell us which way the markets are headed. So we did get that pullback, short started to cover, and then sure enough, we just grinded higher pretty much most of the day. Now, I've mentioned many times, this is a dull market. This market is so dull, boring, it's very quiet. Only a handful of stocks are moving, hence Apple with their product launch and Baidu and some of the bigger players in the space. Just very, very quiet. That tells me that be ready. And I also want to show you something else upon doing my analysis of the dollar index, which I have in front of you here. I'm not going through any indicators today. I like to only point out certain things that are meaningful in the short video that I'm doing. So the indicators are starting to roll over a little bit to unwind that overbought reading. So I'm not going to get into it, but I do want to show you what's going on with the dollar. And of course, we'll do a review with the indices. But first, the dollar. The dollar, as you can see, has literally exploded since early July, right around July 14th or so. We did get that push lower right around here, and I think it was early May. And that was a basic head fake to the downside. It was definitely move lower. We dropped lower. Now, this is a very big base here. This 79 is very big, and sure enough, it made a low, and that was it. You never saw it anymore. And then we had this descending triangle. We back tested the upper end of that triangle, and that was it. And then we were off to the races. Now, and I mentioned, I said, look, the dollar, you can look at this two ways. One, we have everybody in the world, whether it be Asia, the Pacific Rim, the European Union, what have you, are coming in and buying our goods, buying our real estate, buying our stock market. If that's happening, obviously they have to convert their dollars into U.S. dollars, hence the demand, and it pushes which is great. Then you have another idea of, well, if the market's up and we're starting to get a little jitty, a little jittery in the markets, maybe the market participants are putting money in safe haven areas such as the U.S. dollar, which is the almighty dollar, right? You can't put it in the Swiss franc. It's pegged to the euro. And then that you have is the Japanese yen, which is inversely correlated. So the only really true thing is the dollar. Now, at one point, if the dollar continues to go higher, is what's going to happen with conglomerate companies that are heavily traded abroad. And I mean traded meaning their goods and or services that they make a lot of money abroad. It's going to hurt their bottom line because they're going to have this currency risk. So, how does it end? You really don't know, and no one knows. But on a technical aspect, you could see that this thing has gone parabolic. And if you haven't traded currency or haven't observed currencies, you would see that the currency market is very true to the trend until it ends. Okay, and what I mean by that is obviously the market trends higher, and it will continue to go higher, pushing all of the shorts and to cover, and that will fuel, just like in equities, will fuel a bigger move. Now, if you look at this, you could say, wow, this is crazy. I'm going to start looking to short this. Well, you don't want to be looking to short something that's in a strong trend, obviously, but this is where I think we might have a little bit of volatility coming into the marketplace. Now, if you see here, this is the weekly chart of the dollar. And if you could see that, if I push this back here, we got close to this area, we sold off. We got above the area, and we tried it twice, 2 weeks in a row, and we sold off miserably, and we sold all back down again. We are now approaching this area here, but we've gone up literally in a straight line in 5 or 6 weeks where we're coming to this area. And remember, the reason why our commodities are really taking it on the chin is one of the reasons is because the dollar index is really moving higher. Okay, and that means crude oil is getting decimated since July as this move up. So if you take a look at crude oil on a daily chart and you look and you overlay the dollar, you'll see crude oil started really selling off based on what the dollar was doing. Also, there's an issue with, of course, some supply and demand issues. But believe me, if you haven't traded crude oil news, geopolitical events will always trump the chart and or supply and demand issues. And we haven't had that in crude oil. So, and gold, obviously, our demand in gold is diminishing, and you can see gold absolutely taking it on the chin as well. So, that being said, watch what happens with the dollar. I don't know if this is going to happen today or tomorrow, but it's just super quiet in the marketplace. And when people get complacent, traders, portfolio managers, retail guys, when they get ultra complacent and just sitting there doing nothing, that's when you have some sort of explosion in the marketplace, whether it be a geopolitical event again or something negative, positive about what's going on in the marketplace. So watch the dollar. This is very important, guys, because if the dollar starts to really break down from this area, from this resistance area, you're going to have a big spike up in crude oil. And I don't mean 110, 120, 130, but you probably have a decent move up to par where you can play it to the long side. And it should be an easy trade because we're so oversold. I mean, if you look at a dollar, if you look at a crude oil chart, and let me get that for you, you could see this is a weekly. Let's go right to a daily chart. I mean, you could see this is just absolutely absurd. I mean, we've been selling off since June, at the end of June actually, and literally no downtrend. Every little pop has been sold into. This is very, very oversold, and this is the spot here where that 91.50, 91.75 to 92.50 is good support. I mean, if it breaks down here, you're looking at probably a quick flush to 88, and this is really bad. Now, every day the market gets oversold. Does that mean that you buy it? No, but you watch what happens with the dollar, and then you can play it accordingly for different stocks as well. Oil service stocks. So that's what I'm watching. I'm watching that in the coming days and weeks. It's too quiet coming back off of the summer, off of the Labor Day weekend, and all of a sudden now we have this week absolutely dead. We had non-farm payroll numbers apparently being a non-event. So just keep an eye out on things. I do believe and I feel that we are going to be ready for some sort of explosive activity in the marketplace, up or down. And I can't tell you that right now because if you look at price action, it's doing absolutely nothing. So I can't, as a technician, you can't go by what's happening. If nothing is happening, so be it. Now we have to wait and let the market tell us which way it wants to go. And here's the ES on a daily chart. So we've gone really sideways for the last 10, 11 trading days, and here's the hourly that I wanted to show you. And yesterday I said, watch guys, be very careful. Yesterday's low, if it takes it out on a closing basis, then I think we have something bigger and better. But other than that, I do believe that they'll probably end up buying the dip. And sure enough, they came in and they bought the dip and squeezed the shorts into the close the last 3 or 4 hours of the trading day. Okay, now we're down about 4.5 again. So if this does hold, then we're looking at our higher low and lower highs. That is bearish. Okay, so right now, there's still not enough evidence to decide which way we headed, which way we're going. I do believe that even if the market popped up here once or twice, I do believe that I think the markets are pretty much put in a local top. And what I mean local is just temporarily, and then I think we probably see lower highs and lower lows, a series of that, and then we'll start looking for some downside targets. But right now, it's still too early, unfortunately, and there's nothing I can do. I wish I could give you more, but if you're on a sideways consolidation here, it's still bullish, but price isn't going anywhere. Okay, it's a very dull market, and we never short a dull market until the price tells us to. All right, now we'll go into the other indices, and we'll just kind of wrap this up. Diamond, same thing, double top, hasn't gone anywhere. Up 50, down 50, up 30, down 30. It's not telling us anything. So what does that tell you in a dull market? Cash is a position. When in doubt, stay out. Wait until something happens, because you don't want to be fighting the trend or trying to get short or long or trying to do something, and then all of a sudden you're down on a day, you're down on 3 days, you're down on 5 days, and next thing you know, you have to make that money back. And when you do get a nice move, you're just back to break even again. You don't want to do that. There's nothing wrong with taking a trade or two, but if the market is not doing anything, be more selective in your trades. Transportation sector. Here we are again. Made new highs a couple days ago, and what are we doing? We're just flagging yet again. This is bullish. I would suspect that we probably tagged the 1272. Now, if we break down from here, okay, and this middle trend line here, you can see this middle line. If we break this midway support, then we're going to probably start tagging the 34 and the 50-day moving average, and at least get back down to this target area here again. But we need the market. All right. If transports, which is our leader, does not move, then you're not going to get any movement in the marketplace. Okay. Now remember, we do have a couple leaders, not just the transports, but we have obviously the Qs, the Nasdaq, obviously, and then of course we have the IWM, which is the weakest index of the bunch of the five that we follow. It was literally popped up a little bit and managed to hold above the 34 and the 50 moving average. So let's see if this holds. Pretty much, you could even take yesterday's low here, 114.63. That'll solidify that uptrend. Once that breaks on a closing basis, you get a cut 2 days of closing below that. Then I can just tell you that we're probably heading back to the 200. Okay. Excuse me. Watch this IWM as well, because that should give you some clues of which way this market's headed intraday. And then of course you have the Qs, the almighty Qs, which continue to really outperform all of the indexes, and it is just sitting right here doing not much of anything. Okay, so while we have a battle going on with bulls and bears trying to get out of this range, let's see what happens here, because eventually you're going to have a movement again, and it just can't. We go up for 15 days, we go sideways for 10. We go down for 3, and they buy the dip again. So eventually that's going to change. I'm really eager to see what happens in the coming days, because the market just not going to be able to stay here sideways like this forever. So just be very, very patient. Use your stops. Be selective in your trades until volatility starts to come back into the marketplace, which it will. Trust me. Have a great day, and we'll speak to you tomorrow. Take care.